Right, an active day on the currency markets. The dollar index has hit a 5-month low. Dollar yen is down to 94.55. Euro dollar's a little bit firmer, but plenty of action on sterling today. Earlier on today, it hit a 6-month high against the dollar. We got to, 158.17. And then a short while ago, S&P came out and lowered its outlook on the UK. They downgraded the outlook from stable to negative. The actual credit ratings, the sovereign credit ratings, have remained unchanged, but they certainly, S&P certainly said, look, we looked at what came out of the budget and decided that the position was likely to deteriorate in terms of public finances more than we originally thought. So sterling back down to 155.28. You haven't got euro sterling on there, but it had an 87 handle, and immediately that shot up to 88. Joining us from Adam Bobroff, trading floor manager at Foremost Currency. Adam, good to see you. Sterling was on something of a tear, and then S&P threw a train in front of it.
Yeah, absolutely. We had obviously FOMC minutes, a lot of anticipation over that, causing the dollar to back off as a result of further quantitative easing looking to be on the cards, something that they say is going to be a necessity, as you say, moving up to the 58 mark. But of course, with rallies like that, you can expect a short, sharp retreat back down, which is what we've had this morning, of course.
Yeah, on the back of that news, would we have had do you suspect, would we have gone further without it? Would we have had would you expect a sort of a retreat anyway? And what is the level at which we now consolidate?
Yeah, I think the consolidation level, really, we were looking for something around the 58, 59 mark, really. And I think that news just stimulated the dollar to move back to that kind of level. But of course, as I say, with a short, sharp move, you will have profit taking at that kind of level, where the market will obviously naturally come back down.
Adam, it's Brian here in the States. Give us a little bit of a long-term view on the dollar, because there's a lot of debate now over whether there's going to be pronounced weakness on the long term.
Yeah, I think there probably will be. We're realistically looking now for 160, 170 for the third quarter. As I say, this short, sharp move back down we've had this morning was really expected on the move we've had thus far this week. But medium-term view, certainly up towards 160, 170, yeah.
And of course, Adam, with the Bank of Japan meeting this week, there's no change expected in interest rate policy in Japan. But could there be a possibility they actually can upgrade their outlook for the Japanese economy? And what kind of impact will we see in yen trading if they do?
Obviously, Japan's had difficulties with the GDP figures that they've had out recently. Pretty negative sentiment from that. So I think they're going to have to be careful with their next move. The GDP figures looking to hinder the yen over the course of the coming months, certainly.
Adam, good to see you. Thanks for joining us. Adam Bobroff, trading floor manager at Foremost Currency.